everyone. Welcome to the weekly review. This week we'll do a bit of a deep dive on everything, all indices. Got lots of individual tickers to review, up to around 80 right now, so I'll do it over multiple videos. But for now, we do the market deep dive, and I'll start with a recap for the week, and do that by turning on the previous week, and then the Q3 range just now expanded. So these are now new values, like the mid, the low, and the high stayed the same. Mid moved and low moved. Previous week is still the same. And this was the beginning of the week. No, the beginning of the week is here. So basically, we opened the week, tried to go back up, got rejected at the previous midpoint after a bit of an overshoot. Then we went to the previous week low and the quarterly open, bounced a bit around it, but eventually we lost it. And when we lost it, we went down, back tested once, and then flushed and never looked back. And as the size of the move, we basically doubled the previous week. So this is the previous week, midpoint at the low, and we overshot it a bit, but more or less it was a double up of that move, and that's kind of it. Now, next week we have Jackson Hole, and I think the opening remarks are on Tuesday. It's Tuesday and Wednesday for the event, but I think it's Tuesday. And I honestly don't know what's going to happen in regards to the market. We can still go even lower, and I would expect that the Q2 mid is going to be our support in the end if we have a negative reaction. Regardless of negative reaction or positive reaction, I think we still have a bit to go higher. So I would expect we retest the Q3 open as the initial reaction maybe for Jackson Hole, and then we start another leg down if we remain bearish, and then do this a move that will last until the turn of the month. And because we will go down quite a bit, that will make OPEX an up counter move. So quarterly OPEX should push us higher, not lower. And once the month turns and the trend stops, we should start going back up and doing this. This is let's say the bearish version. And one of the things we need to look out for is this downtrend here. So there is that, and there is also the much smaller one here. So once we get out of the smaller one, the next resistance point is going to be the upper trend line. But we could potentially do this. So down, up and breakout, then we continue up. This is now a very, very, very big resistance zone. So we have the Q2 high, we have the Q3 open, we have a weekly low that we can hide now, and we turn on the weekly version but nothing there. I think it's also the July or June area. June, yeah, it's the June high as well. Just wise, it's also August mid is supposed to be here, I think. Yeah, August mid. So this whole area between 442 and 446 is now a big, big confluence of resistances. Let's turn on the moving averages and see if there's anything there as well. Well, yes, it's the 50 MA, and assuming we're gonna be like 5 days in the future, the 20 MA will also be confluent. So this at around Friday, this will be a huge confluence of 20 MA, 50 MA, Q2 high, Q3 open, Q3 mid, and so on and so on and so on. So this is the next level where we want to be looking at shorts uh, if we get to this point, and I think we should be seeing that kind of move. turn off moving averages, put this back on. Yes. So this is the short-term stuff. To recap, we want to break this downtrend by making a higher low or equivalent low and then breaking out above the trend line. Then the target becomes this 442, 446 area. The Q3 open, I will expect a bit of an overshoot, like once, let's assume we break out above it, we overshoot a bit, and then we start turning back down, and the Q3 low becomes a pivotal point, like we may bounce again or we may break down. If we break down, we go to the Q2 mid level 424. If we bounce again, look for a breakout above the trend line. If we get it, we will likely go above this resistance as well. I would not expect this to hold on a second attempt to go above it, and then the target becomes the Q3 high to 459, potentially even another overshoot. Uh, and we'll get to detailing that out when we zoom out in a second. So now I can hide this. This one is for other purposes. We don't need the Q3. Actually, I'll, I'll leave the Q3 range on, or actually I don't need them. Don't need this either. What we do next is we look at this is the weekly chart, and this is the monthly chart, and this is the quarterly chart. Quarterly is starting to look quite ugly, not necessarily on SPY, on Qs as well. Like we have a rejection at resistance. We have a high wick, a pretty large wick above. We have lots of room to go down and so on. So it's not looking very nice for the quarterly. Monthly, somewhat similar, big red candle. But on the weekly, we see this potential MACD crossover. And I don't think this will be a very big deal in the very short term, like meaning 1 to 2 months. But it will be a big deal once a bit more time passes. And what I expect to see is something like this. Basically, the MACD line starting to go down, crossing below and going a bit below, which it will do because it's lagging. Or if it doesn't bounce, the trend will be down. So let's say we have the blue line maybe goes a bit below, does something like this, and then the orange line goes like this and it starts to go down. And even if it goes above it, it's gonna do like this lower highs. Because this is a very common pattern for tops, and we saw it for the 2021 top. We see it here as well. Like, let me invert, and it went up, right? So it went up, the trend stopped, we had a pullback, then it returned quote unquote bullish because it dropped, so bearish. It dropped, but it made a higher, a lower high, sorry, and it couldn't keep up the momentum. Even though price went higher, this made a lower high, and it was a sign that the next crossover was actually pretty big, and it kept going on and on and on and on. This is a pretty common pattern. Like I said, it's a MACD divergence. It happened multiple times in the past as well. Like, let's look at 2007, like top, then the next top was much lower in 2000. uh, it started a lot earlier here, so much lower top, even lower top, even lower top, and so on, and eventually it led to a breakdown like this, and we see price doing this. So another thing to note is that these take quite a long time. Like it could be months. This was July 99 until September 2000. So it can take up to a year. Uh, but the pattern we're looking to see here is, like I said, that MACD starts going down and we do something like this uh, and on the weekly. And emphasis, it's the weekly, so it's probably going to take 2 to 3 months to play out. I don't expect uh, even the September October pullback to be a meaningful pullback. Like we could get at max 10%, but then we go back up and potentially when the conditions meet or something else breaks, then we have a very large pullback. And that very large pullback is likely going to be based on uh, the big ranges. So what do we have here? So we have this one as a key level. This could just play out as a deviation. We have this as a key level with a deviation. So for 360-ish to 430-ish. This is our range. Most likely this will turn out to be a deviation. And we will bounce in this area here, maybe a bit of overshoot to the 425-ish level I mentioned in the Q2 midpoint. Could go as low as 420 as well, obviously. But the first time we retest this is likely to be a bounce. Like we do bounce, we go back up, then we do this, then we back test it, and only then we really go down. And we have two targets. One is the 380 area for later on. This is before. No, actually a 390 area. And then the 360 area if this doesn't hold. Uh, the MACD thing is quite visible on other stuff as well. For example, Bitcoin. So it went up, it recaptured, and we have resistance here. This, let's hide. It's this level here. All the wicks are in the horizontal line. So let's say like this, 41K, and it wicked, small wick again, and then it eventually gets rejected and breakdowns. And at the same time, what does MACD do? We had a crossover, it tried to go back up, it made the lower high, uh, and then it just hovers around here. Um, Not the same type of pattern, but pullback, then a much lower high on MACD, and then a big breakdown. So right now, looking to see this play out for, did I close it? For all indices. So don't expect immediate major breakdowns. Expect a bit more downside if we are to continue down next week uh, to as low as 420. But if we go as low as 420 next week, due to Jackson Hole or whatever, expect September to be bullish. We won't have a pullback. Maybe we have a pullback at the end of September, but don't expect going into OPEX we're gonna be bearish. And the same thing we can see on Qs, the same structure. On IWM, we're going towards it. On DIA, we're going towards it, and so on. Another thing to look at is have this very nice trend line drawn. I'll keep it on the weekly. No, actually, let's put it on the daily. This. So, uh, this this is what I now call the bull bear pivot trend line. It's let me show you what happens when I draw a channel with the midpoint being this trend line. and it fits very nicely. Maybe I can do it a bit smaller. Draw it back even more. It aligns with a lot of what happened in the past. So I think it's a good level to keep an eye on. And if we ever break above it, I would expect we will see a large bull market, the likes of this one. And when we eventually get above it, let's assume we do over the next year. So we do this, 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 maybe a bit of an overshoot. So 560, 570 would be the target if we were to have a breakout at the beginning of the year, next year, and it would last up until Octoberish. So something like this, if it were to happen. But I don't think that will happen. For now, as we are in the lower part of the of this channel, I think situation is relatively bearish from a macro perspective. I can hide this. Let's do it like this. And rejection at this point, and it's looking like we need to go to around this level, like the halfway point, something like this. This would be the target for the pullback. Not like I said, not necessarily the continuation of this pullback, but the pullback that will actually make the bottom. So we could potentially go up again, like do this, but I think there's a high chance we will tag this trend line eventually, something like this. Let's say if it continues to be bullish. If we lose this trend line, we actually go lower, and 400-ish. It depends when it happens. The sooner it happens, the lower we can go. And of course, moves can overshoot like it did at the top. It can do at the bottom as well. So we can actually go lower to 390, like the mid-channel point indicated, like this, this, this. I don't think we will retest the low anytime soon unless something breaks, and that's completely unpredictable. But uh, for the downside is pretty much capped. We can overshoot a bit, but not by much, and that's kind of it. And the same trend line can be seen in uh, Qs, or not necessarily the same one, but a similar one. This is QQQ. It's a bit different, but works in the same way. Let's double it up. That one, this one. That was an overshoot. You get the idea. Dia has kind of the same thing here, and we've tagged it as well. For Dia specifically, this is a very structure, like the one from, I'll make nice figure, this one. This is a very bearish structure, a rising wedge. I expected it will go back to the highs, but when the breakdown comes, the breakdown will be big, and I think we will retest 315 eventually. This is basically the recession scare. When the market starts becoming scared of recession, this is likely to happen. Okay, so back to SPY a bit. You get the idea from the macro sense. We have uh, ACD. Can close it. Let's look at other stuff as well that are pointing towards an imminent move up. McLennan oscillator. Daily. Daily McLennan oscillator, we are at 75, but the peak was 10 something even lower a bit. Well, let's call it 100. And as you can see, it doesn't often go below this level. And I would expect it, even if we continue down, it's at 75, so it's around here. I would expect it makes a higher low, and then it goes back up, maybe goes up to 0 or something like that. I don't, it's unlikely that we will drop much lower from the current level. And $10 isn't a lot. Then we have, this is a breadth indicator. We're coming towards the buy point where the market usually turns. Then there is, oh, I had a polynomial regression bands. This is the daily. It, I can actually make it wider, I think. Uh, change. But you see that the channel, with the exception of a couple of overshoots, we are right at it. So again, we cannot drop much further from this. Any day now, it's going to be a buy the dip day in which the market is likely going to rip higher, potentially even on Jackson Hole. If we go to the weekly, we can see that the same thing. We are at around the mid-channel point, and this is where we got rejected. Basically, I was playing around with this one on the daily, and that gave me the idea for the channel on the weekly, seeing this. Hide it. What else was there? It's kind of been nothing really. We are relatively low again, much further now, and we enter the very clear buy zone where we bounce. It's another breadth indicator. So probably another 2% down, and 2% down is, let's see, 2.5-ish. So it's 425. Another 2.5% down on the market would probably put us in the green, and it's a buy as well. So this is not a time where we are likely to see a breakdown, in my opinion. We're too oversold. And just to make another last comparison to previous drops, we, if we were to have this kind of drop, or we would probably be around here. Another push down, and we will likely get a large rebound. Same here. We're probably around here at max, maybe like this. Another day, another minus 2% day would be a clear buy, and we get a large bounce. It's the same situation all over. Like these drops are big, but they have very large counter moves, and then the big drop continues if we get strong rejections when it tries to go up. So the key in a bear market is not how low we go necessarily or how much we drop, is what happens when we try to go up. A bear market uh, creates downwards pressure not because we drop fast, but because when we try to go up, it gets immediately sold. So we go down, it tries to recapture this horizontal level, we get strongly rejected with this, like, what is this, 148 candle, then we flush down because no more buyers and whatnot, then we get back to this level, and we get this 2% candle down after the rejection, and we flush down, and so on and so on. Same here, like slow drop, try to go back up, and when we go back up, we get like a 1.5% candle, but the candle is actually much bigger because it is compared to the previous thing. So it's 3% candle, 287. This is what we're looking for to see here as well. So this is still a relatively slow drop, and let me put back the Q3 range. Q3 range, Q3 open. What we're looking actually to is see a bounce here, and then when we get to the Q3 open, bam, it flushes down like crazy. Like it maybe it goes up to 446 to the Q3 midpoint, and then it gets rejected. And even though the candle is like 1% down compared to the previous day, actually we will see like a 2% candle, 3% candle like this, something like this. But if you measure it from, let's say, if the previous day was here, and we go down, it would be like 1.4%. It doesn't look that impressive, but the size of the candle matters even if it goes up and gets rejected. So this is what we're looking to see for bearish. Watch this area like a hawk. If you see sign of rejection, you can go short, back short. Okay, so I think this is it for SPY. Then we go for the Qs. I do the levels here as well. I have one more thing to show for SPY. If you remember from a while back, I had this bad bar patterns compared to the top here, and it finally played out in a relatively similar way. And kind of this is what I expect. I don't think we actually go lower next week. I think we start a move up. I don't think we get this middle move up, but I think we get this push above 460, and then we get a big pullback that will take us to 410, 415. This is my base case. And now going back to Qs, the same thing is applicable, but Qs will likely be the loser moving forward. So I would expect DIA would move us higher and IWM. I could be wrong, obviously, but when because Q's already lost the trend line, when we move up, I would expect it's going to be rejected either at this level. September. This is when I think the rally stops. So let's assume that Q's also goes up, and it should get rejected at the combo between the trend line it lost and the upper one. So when we get to this point, then Qs will flush like crazy, and we do this. Maybe not 311, but 321. This is the level. Yep, somewhere in this area. Then we have IWM. IWM is going sideways, backtesting the trend line it broke out of. It looks quite bullish from Friday's close. It should do this. Don't think it goes above 200. This should pick it, cap its move up, and then big drop. Dia is interesting. From the bar patterns, it's supposed to go even lower, and maybe this is the thing that uh, gets us even lower next week. But I don't think that will happen because it's also on a combo support. Is this horizontal level here and this trend line? So I think it's more likely that we go up like this. We pick with everything. So this is how I think it deviates from the top from 2021. And then when eventually it breaks down, it it breaks down together. Uh, yeah, that's kind of it. Then we have bonds. Let's look at 10-year near the peak. What I wanted to show here is that there's often this kind of double top, triple top pattern when yields um, peak for the cycle. And let's look at a couple of cycles. I can look at TLT because it has more candles. I'll invert it so that it looks like yields. Okay, so let's see. This is a cycle peak. Let's look at the previous three cycle peaks. This cycle peak and this cycle peak. Even two more behind. Cycle peak, cycle peak. Okay, and one top, second attempt higher, another attempt higher, and now the double top attempt. And here, push higher, another push higher, and it went a bit higher, which we could also obviously see. Something like pull back goes because pullback is required because equities won't go up if the yields don't calm down a bit. So another push down, then it turns this into support, then it makes another push and it exhausts itself like this. So it does a deviation above the previous top, doesn't look very spectacular, and then it completely collapses. Looking back here, this was a short one, peak, down, double top, crater. Peak, down, double top. Actually, let's split this one in two. Peak, double top, crater. This one, peak, lower high, uh, and then crater. This one, top, double top, crater. One, two, three, crater. This is kind of the way it works, and it's the same with dollar as well. But dollar is nowhere near the highs at the moment, so we don't care yet. I would expect dollar will go up a lot when the recession scare comes back. Okay, and for oil, somewhere else. Don't remember what I did. I'll do it as I see it. So where are we now? There are a couple of levels we're interested in. This one doesn't matter. This one is too low, so we don't care. Let's cut the trend lines. And this level seems pretty important, so I'll make it thicker. So what can we see here? So consolidation in this range. It can go below this level and still not break the trend. So this level between 75 and 85 is a chop and lack of direction range. To really be bullish, it has to get above 85, and it hasn't. So if it hasn't, this makes this a lot more bearish than under normal circumstances because it can it can chop in the range. So unless we get above 85, and even if we get above 85, it can get scary, like for example this. But my expectation is we are in a chop range between 65 and 85. So even if we get above it, as soon as it goes back below 85, it's extremely bearish. So if oil goes above 85, then goes below 85, look to short on a backtest because it's very likely going back to the lows range. And I would expect it to move in this range for the foreseeable future. And in the same way, if we go back to the lows range, there is a possibility of a breakdown again, because going below 65, if you remember from other videos, is extremely bearish and usually causes momentum. When we lose this level, it we flushed down to 37. So uh, now the bias is bullish, but it hasn't proven itself beyond chopping. So look for a breakout above 85, which I don't think it will do in a way in which is not just a simple deviation. Then if it goes above 85, goes back below it, backtests, and starts dropping again, loses this low, oil is very, very bearish and it will go back to the low range. Let's look at the Chinese market as well. So let's look at the weekly. This one is pretty tricky. So the low here is pretty easy to get. The midpoint was relatively easy to get. The high point is a bit strange because it has this large deviations above it that always fail. And on the daily, it's getting to this point as well. And just like with oil, it can get below the midpoint and not do a complete breakdown, but it's not looking good. So for China, we need to see it hold this level or at least deviate and recapture quickly. And this quickly can be like 2 weeks, let's say. If it does this, it's bullish again. We have a potential trend line. So do this, recapture, then it becomes bullish. Maybe it goes back to the top of the range, which would be here. And it's a small one, we make it thinner. And midpoint probably here. So yes, this is potentially China. But if this doesn't hold, it's extremely, extremely bearish. I don't think this level will hold again, and I think we have a much bigger breakdown in Chinese stuff. Next levels is holy fuck. Like China market can potentially crash. Maybe not. Or it's a big drop, but not a crash. I mean, the next level would be around here. This is certainly achievable. Like 15k is no 14k. 14k is achievable if it doesn't hold on this 17.5k level. And this doesn't make US less bullish. China can drop by itself, no issues. It won't affect US equity significantly, I believe. Okay, wanted to do something I haven't done in a long time. Look at the deltas. So this is lower delta difference. We're getting close to the zero level, which is the neutral positioning. Zero is neutral positioning, and we're still slightly bullish, uh, but the zero level is a support slash resistance, like resistance here, resistance here, resistance here, support here, support here, support here. Approximately support here. We didn't go exactly to it, but we bounced off it. So another reason why I think we bounced. Lower delta and higher delta, the crossover between when one becomes bigger than the other after a prolonged period is also a moment where it acts as support slash resistance. So the crossover is big. If we were to crossover, I would be turning bearish. This doesn't really tell us anything. Doesn't really tell us anything aside that even though we dropped very little. Lower delta over higher delta is back into not bullish range, but in the low area where it's no longer uh, bearish because we're too overbought. What else here? Call delta, put delta, call delta over put delta again back to reasonable ranges. Uh, Price delta difference percentage. I think it's the same thing as the one above. Put OI over call OI is in the danger zone, but what I would like to see is something like this. We get a rally where a lot of out of the money puts are bought and they increase in delta. This would be a sign that the rally is fake and we are about to drop big in 1 to 2 months. So I like this is if we rally and this goes higher, it's a sign that a major pullback is coming. So I like seeing this, even though my expectation is that we rally. Then we have the positioning rating getting close to 25%. Support multiple times in the past. Resistance here, resistance here, resistance here, and support, support, support. So looking quite decent. And positioning rating as well, this 50% level, which is either support or resistance multiple times, and we just went slightly below it, but we can still bounce back without any issues. Yeah, that's it. So look for the individual ticker video. There's gonna be like 3 or 4 of them, I believe. We'll see how many I include in each video. Have a good one. Bye bye.